Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. In today's Monday's analysis, we are a bit more focused on what is ahead for this particular week, and the FOMC meeting is something which is likely to dominate throughout this week, and that dominance is not only going to be pretty evident in the equity market space, but also in the commodity and in the Forex market space as well. Now, speaking of the equity market space, there are some concerns with the price action, especially with the leading index, and I'm speaking of the Nasdaq over here. As you can see in the chart, the weekly chart for the Nasdaq indicates 2 consecutive weeks of losses. So the leading index, in other words, the leading index has lost its momentum because for the last 2 weeks, the index has posted losses, right? But the weakest index, the Dow Jones, it posted only 1 week of loss, not 2 weeks of losses. Remember, Dow Jones was one of the most lagging index, one of the most weaker index. As you can see in the chart again, the Dow Jones index, the price is very close to its 50-week moving average, and that is a concern, because if the price drops this particular week below this average, then that means then perhaps we could see more feebleness in terms, or more dismal price action going into this particular week as the week, of course, as the different events unfold. But it is the FOMC and the stimulus package talks. These are the 2 major events for this particular week. Now, the current retracement that we're seeing in the stock market could really be an opportunity, especially if the Fed shows that they are still holding a very dovish stance. In fact, if they show that, look, the Fed could actually extend its asset purchase program, or perhaps the Fed could even put the interest rate down, or even if the Fed is open to buy the stock market through ETF, directly buying stocks. But I believe that is the last bullet the Fed will use. And speaking of the last bullet, there's a special analysis that I've done on our website, so go and have a look on that as well. But moving away from these 2 indices and going into the commodity space, remember last week we've seen both WTI and Brent prices surging to the upside, and that was primarily because of weaker dollar. And now this weaker dollar could get another hit if the FOMC shows more dovish tone. And now the upward move for the oil prices is likely to be, in fact, very much capped, because if the Fed can't show that they are confident about the stock market or about the economic growth, then what does that mean for oil demand? Ostensibly, that doesn't really paint a very optimistic picture for oil demand. Hence, I don't really see the oil prices spiking massively to the upside, if there is any spike at all. But speaking of spike, where we could see some serious momentum, it is your precious metal. Both gold and silver can really continue the rally to the upside. Now, speaking of gold, remember we closed above the critical level of 1900 on Friday. And now, with the dovish monetary policy stance from the Federal Reserve, it is likely that gold prices will not only trash that all-time high of 1921, but they can continue the momentum to the next major important psychological levels, and those are 1950 and $2,000 price levels. These are the ones which really, for me, or from my own personal view, were the levels which really matter. So let's see how the week evolves, let's see how the price action acts, but I believe the retracement in the stock market could be an opportunity, because the Federal Reserve, if they show that they are there to support, markets will take that as a risk-on rally sign. But at the same time, in the gold prices, the dollar could see a bit more weakness, and gold prices can really continue their journey to the upside as well. That's all for today, and I'll see you guys next time.